Good morning and welcome back to Almus Market Mornings. It is the season of festivities. Look around anywhere and you'll see lights, diyas, and the people in wonderful clothes. It's a great time, and we wish all of you a very happy Diwali and a new year ahead. Moving to the markets, there is plenty going on. The Chinese political leaders have their fourth plenum starting today. Investors will look for the post-meeting readout, but this is the precursor to their 15th five-year plan. So an important event. There is the vote for the Japanese Prime Minister tomorrow, which could keep the yen on the edge. Then there are hostilities between Israel and Hamas, which seem to have restarted, and Israel has stopped all aid shipments. This is again an evolving situation. Hi, JK, happy Diwali. Apart from these developments, I wanted to know what's going on with gold and silver. I mean, they had massive moves on Friday evening. Do you think there is a bit more scope for correction?
Good morning, Suraj. Happy Diwali to both of you and all our followers. Um, yeah, I think the parabolic move that we have been seeing in the precious metals was crying for a correction, and yes, we had one day of correction. Of course, that was very steep. Um, the gold was down 2.2%, and then silver was down around 6.5%. I'm only talking about the international market. And if you look at the domestic silver, it was 7.5% down from the peak, and gold was down 3%. And this was much needed, cool off. And perhaps the peak demand, the seasonal demand was also done by then. That could have been one of the triggers. And we also heard about margins being raised in most of the exchanges. It was started by our MCX, margin increased just by 2%, of course. Then COMEX was reported to have increased the margins, and the Shanghai Exchange also increased. I think those moves came at that time when the market was overheated, and that happened. But what's ahead? Uh, I'm only looking at it in a technical way based on historical moves. Whenever any market, be it even the stock or the currency or commodities, whenever they move, up or down for consecutive 8 weeks, you normally get a good correction. So even last week was also still a very bullish week, but if you go by the historical behavior, I think the week following the eighth week can be a corrective week. So we might see a good pullback, further pullback in the gold. Let's not think that it already fell a lot on Friday, because it has risen multiple times of that in the previous days. So we can I won't be surprised we even go towards 4100 or below that in gold, and it could be a time for profit taking as well. That I think be brace up for some more volatility in gold and silver both ways. And of course, a lot of people will be waiting for buying on dips, no doubt. Some amount of patience in the very short term is what I would recommend. Global markets, US continues to be faced with shutdown, but the stock market there is not taking note, nor is the stock market taking note of the regional banks' failure that we observed, or we noted on Thursday. More focus is on the earnings season. A lot of relief for the market was seen after Trump said that the high tariffs on China will not be sustainable, and they would go into a negotiation in the meeting which is coming up between President Trump and Xi as well. Slightly concerning was the news on Gaza, where there was a renewed bombing by the Israeli side. Hopefully, it doesn't get more serious, but some relief is expected on the Russia-Ukraine war, in the sense that at least again we are seeing some meetings happening. President is expected to meet Putin in Budapest in the coming days, and hopefully that gives some cheers on the geopolitical side. Otherwise, on the in the absence of U.S. government shutdown, in the absence of U.S. government working, rather, we did not have any much data to chew upon. But today morning we have had the Chinese macro data, and almost all the parameters have actually been very good. GDP, of course, came at 4.8%, which was as expected. Otherwise, industrial production, retail sales, unemployment, all of them have actually beaten the expectations. Unemployment rate is 5.2% from 5.3%. So it's in Asian market, if you see, it's a full risk on. And surprise is that the chances of Takechi being once again preferred as a PM is also increasing. As you said, tomorrow they will have a leadership meeting. So I think once again we are seeing a big rally in Nikkei. We had 2.5% rally in the Nikkei so far. Korean market is also up. So overall, the risk sentiment in the Asian market at least is very good. Going ahead today, again, we don't have much of a data slate in the US, but this week we will have the flash PMIs number, which will be seen. Normally we would have had the GDP number and core PCE numbers from the US. That again will be missing. So it kind of, I would say US dollar has many challenges now. Once again, government shutdown continuing, some concerns on the credit market after the regional bank's failure. We are seeing a heavy drawdown on the repos from Fed. That was also reported. Fed meeting will go ahead without much data to consider. So there will be some sort of a, vacuum for them as far as the data analysis is concerned. But if the shutdown continues beyond 1 month and all, maybe we have a, 0.5% cut instead of 0.25%, because eventually it is going to impact the economy as well. So that's just a minority view, but then that cannot be ruled out because the situation is still evolving. And it's also reported that the US debt has now almost touched 38 trillion, almost 37.9 trillion is what is reported. So overall, the concern about US economy and the US dollar is quite dovish, I would say. And so the underlying trend for the dollar would be down, notwithstanding the current correction that we are seeing. Then, of course, the rupee, we're just seeing what happened a year back, just on the eve of Diwali. We were, the rupee was at 84, and it went all the way to 89. We had already noted some concern at that point of time because the dollar index was basing out at 102, and then FI flows started negative, big negative in October 24, and then eventually we had almost 24 billion of FI outflows that we have seen. And the stock market, as we have reported, even in the recent updates also, stock market gave a negative return of around 4% since October last year. So where do we stand today? See that even once again in the historical context, when the rupee was at 84 in October, Chinese yuan was at same level what it is today at 7.12, and dollar index, which was at 102, went all the way to 110, and now it is back below 100. It's a new level that dollar index is trading, whereas the rupee continues to be underperforming. And obviously from 84 it has gone to 18, and now we are near 88, whereas all other currencies have rallied. But I think looking ahead, I'm seeing more optimism. If you look at the Indian market, I don't see more than 2 or 3 sessions that it will take for us to hit a new high in the Nifty index. The sentiment is positive. Government has done a lot on the consumption side. Tax cuts were given in the budget, and now we have had the GST cuts. So we have both the direct and indirect tax benefits for the consumers. Is that supports, and there is optimism that the trade deal might go through, although timeline is not mentioned. But underlying um, undercurrent is that this can go through in the coming days. As I said, rupee is still at 88, but I think looking at the way the sentiment is on the stock market, as well as on the outlook, and as well as the turn in the FI numbers, which is now started to become a bit positive. I think prospect for the rupee looks good. If the dollar index does not go too high from these levels, I think 87 can be seen probably. If supported by flows. And interestingly, I even heard that after intervening at 8880, once again RBI was spotted intervening at 88 as well. That was reported on Friday. So it does appear that the authorities are not happy at a very weak rupee as well. We are starting on a very optimistic and positive note when this in this Diwali, and yes, markets are cheering, and a lot to cheer in the coming days as well. Happy Diwali to all of you once again.
Thank you, JK. And yeah, it seems today during the Diwali day, it also seems that there's a good positive momentum, especially in the Asian markets. Good risk on mode, starting with the Chinese data, which was quite positive. Strong GDP growth, retail sales, and other metrics, all of which has improved. Unemployment rate has also ticked down. So overall, when it comes to the Asian markets, it seems like a good time. Even the Japanese vote for PM tomorrow. If let's say, would you the JK? Just a question: if Takaichi wins tomorrow, like she becomes the prime minister, we are again sort of going into a easy sort of easy money sort of period because
I
she
think.
is pro fiscal.
I think so. I think so. It's just that in the first level or first time when the expectation rose about her coming, market was seen covering the short position in the dollar yen, and
Hmm.
there was optimism suddenly built into the market. Um, but now they are a bit cautious. They don't want to, hurry into the position because they want to wait for the actual result. So there should not be any last minute surprise. But if it finally does happen that she is back, I think we have heard her own statements about not hurrying to cut rates. So the BOJ should not hurry to cut rates, and the economy is still going to face some issues because of the tariffs from the US and all that. So there will be a weakness, or rather, the risk on sentiment will be driven by Japanese monetary policy, which will be kept loose for some more time, and also the fiscal spending that will be helping the market.
Right, right. So again, that's something to look out for tomorrow, the Japanese election. And in domestic markets in India, JK has covered very nicely in detail about the kind of scenarios we were facing last Diwali towards last year and this year, how how it's different because last year we were at quite a negative sort of sentiment when it comes to equities and also the way dollar index was basing out. This year's themes seem to be a bit more positive. The outlook on stock has improved. The government has done a lot to prop up consumption, and also the dollar index it's sort of at a weaker level. So this year seemed to be a bit more positive, and we'll see how all of that plays out. That's it from us today. Happy Diwali and a happy New Year to everybody. And we'll catch up on Thursday with a fresh round of updates.